Okay, we're live. Good afternoon. Today is Friday, June 11th, 2010, and we had the market finish on a positive note here with a late burst of buying. We're going to start looking at the weekly chart here of the SPY, and you can see here that we have come down to this critical level, this 104.5, 105 area, and we've spent some time basing in here, and now this week we've seen some heavier volume. Now, what you'll see though is that the volume actually came more to the downside days, and that for instance, today's volume we had seen was really light compared to the average of the last 20 days. It was a very quiet session for most of the day if we take a look at that 1 minute time frame, but we did get a late day burst of buying here, and again that last half hour of the day has been really last hour of the day has really been where a lot of activity has occurred. The first hour and then the last hour of the day. So great, this is more summer type activity, and you have to remember when it comes to volume as well, when you look at a weekly time frame, a lot of times we see that a move will develop out of a low volume environment. So we have right now a pretty low volume environment, but it doesn't mean the market can't hold on to the gains. If you look at what happened from the lows of last year, basically we had that first big part of that rally occurring on diminished volume. So a lot of people complain about volume, well, it's light volume and this and that, and volume is important for confirmation of a turnaround. We still don't have confirmation of a turnaround. Okay, so the daily time frame we're still pretty damaged here, but as I've been saying to subscribers this week, it looks like we're just in this range now of 105 up towards that 111.30ish area. And in fact, when we take a look at the 65-minute time frame here, we've broken this downtrend line. So that downtrend line was was broken late in the day. That's where we also see, of course, that green moving average, which is on this 65-minute time frame, meaning each one of these candles is 65 minutes. 120 of those candles represents 20 days of trading. So there's a little bit of math in there, but basically there's six equal lengths of 65 minutes in a trading day is a good way to think about it. Anyways, here we are now making a run up towards the high end of that range, it appears. If we take a look at what's the volume, so here's our range, basically 104.5, 105 up towards that 111 and change area. If we take a look since we've been in this range, if we actually go back to from this gap lower here, if we take a look at that, the volume weighted average price. So over the last couple weeks, as we've been in this range from here, from that gap lower, the volume weighted average price is represented by this horizontal yellow line. So let me just clear all those out and redraw that so you can see it, and I have no control over where the line is being drawn. You can see it's calculating volume by price, and the average price right now since this most recent gap lower is right now at about 108.5. So that'll be an important area, just a general area for next week. That's where we had seen some strong resistance as this rally tried to emerge on, I guess that was, what was it, Tuesday? Tuesday or Wednesday rather. So the market tried to rally. Obviously, it got up to that 5-day moving average and got smushed on Tuesday afternoon, Wednesday afternoon. Thursday, we had that gap higher yesterday. A lot of people were looking for it to come back down. Instead, it held what was at that point the 2-day volume weighted average price, which now becomes that 3-day. But anyways, back to the 10-minute time frame, we see that we do have on this 10-minute time frame a pattern of higher highs and higher lows. It is pretty sloppy, it is pretty light volume, but it is tradable if you're patient enough to wait for the proper opportunities to present themselves. And you can see that it was a battle between the buyers and sellers here based on the advanced decline line pretty much right up until that last half hour of the day. And if we take a look at this advanced decline line and just change it to, let's take a look at 10-minute intervals of the last 5 days. We can see here that we've had some really strong breadth the last during this past week. Let's just change that. In particular, Wednesday and Thursday, we did see, well, it had, until we had that big reversal, but Thursday was clearly a day with broad participation, and we've got a lot of pessimism in this market. There should be pessimism, though, from a longer term structural standpoint, because we are still below that declining 50-day moving average. But for short term trades, and again, it's know which time frame you're most comfortable with. If you're a day trader, you can spend a lot of time sitting around waiting for the right trades to develop if you're patient enough. So for instance, on my watch list today was this Priceline, because Priceline, it's a horrible downtrending stock, but as I was saying to subscribers last night, the stock recently just hit a lower low on lighter volume, and it's a broken stock. This is not trend alignment. But when you look at the 10-minute time frame, what I was talking about was we had this clear level of resistance and these higher lows coming into the stock. It was getting back above that 5-day moving average, and here's a stock that if an institution wants to put a lot of money to work real quickly, here's a stock that trades 2 million shares a day at $180 a share. That's a quick way to get into the market. So if you're looking at it on a 1-minute time frame, you're looking at it saying, where does the breakout occur? We have these higher lows coming up above a rising volume weighted average price, and this is where it really took off. Buying here with a stop just near these higher lows right in there can make for a great day. It can make your entire day if you're positioned properly and you haven't done enough damage throughout this session to your account by trying to force trades when they're not there. So for the week, we had a constructive week. We're going to be looking at this area right now up near 111. Let's just call it 111.25. That's our biggest potential level of resistance moving forward. You can see if we just drag that line straight across, that it is an area where we had resistance prior in this year and that support. So I think that this level up near 1120, 111.30 next week will be a level to keep an eye on. Again, we have lighter volume, but the price has moved higher. Would you rather make a 0.5% or lose a 0.5% on light volume? Get in alignment with the short-term trends if that's what you're trading for. Otherwise, you should be waiting on the sidelines in cash for an opportunity maybe to present itself to the short side. But right now, with this market above that rising 5-day moving average, I'm going to give the benefit of the doubt near term to the buyers and say that we're probably going to head up towards the high end of this range, but I'm going to be willing to bail on an instant. So next week, early on, one of our more important support levels should be found right around here, this 108.60, because it was resistance in here and it became support today. And then again, if we look at the the volume weighted average price since this last gap lower, that's approximately where that level is as well. So it adds a lot of credibility to that area as far as if it holds a support. But if it breaks that level, then we're going to be looking for obviously the next levels, which are down 107.60. That's where we'll encounter this rising 5-day moving average, and then we'll be looking at some of these other levels. So on the weekly time frame, just to go back to that, we a couple weeks ago I was talking about that this market, particularly this rally and then this sell-off. So this rally and that sell-off, and then this subsequent rally with the sell-off down to and through the 200-day moving average looked very similar to what we were seeing here, and we do still run the possibility of maybe a run to new highs, or perhaps we build a shoulder for a head and shoulders top. Nobody knows, so we have to take it day by day, week by week, and see how those structural changes are shifting and where the who's in charge or in control of these longer term time frames. So on the weekly time frame, we've experienced a very strong sell-off, obviously, and now we're finding stability. That stability, we drill down to the daily time frame and say, okay, perhaps we're running up towards here. I still don't trust it for overnight holds. I have some call options, but I don't own stocks because it's just not my comfort level. That's me personally. The NASDAQ is is also approaching this trend line that we had seen. Let's take a look at that actually on the 65-minute time frame. This trend line from the April highs, and we have maybe a potential for a move up towards the June resistance, the resistance of this month up near 47. But that trend line doesn't mean it will hold the market back. But here's our similar support. So this is kind of the same type of range the S&P is in, and if we take a look at the volume weighted average price since that gap lower, the buyers are starting to take a little bit of control. By that I mean that if we're above this volume weighted average price, it means that on average anyone who's purchased since this gap lower is in a winning position. And now we're getting a little bit better breadth. It seems as though maybe some of the headline risks have at least moved to the back page. And that's the thing, is that the headline risks haven't gone away. They've probably just moved more to the back page, and they're still out there looming, which creates that danger that you can't be complacent with this price movement higher, and the low volume is reason for concern, especially when we have the possibility that we're going to get these headline risks to come back in, whether it's jobs report, more stuff out of Europe, or whatever it is that's the catalyst. Also next week we have, of course, options expiration, so that should I think it should actually add a little bit of stability to the market next week, and it's gonna. But again, if we have one of these, what do they call it, exogenous? I don't even know. One of these outside forces come in, something with Iran, or in Israel, or Europe, or whatever. There's a lot of stuff to be worried about, and we're not quite climbing a wall of worry in here. We're in the acceptance of a problem. We're not in the denial and complacency part of it yet. But anyways, enough of the shrink stuff. I'll leave that for Dr. Perlman, Phil. Anyways, we could still see some further upside in these markets next week. Let's take a look at the Russell 2000. The Russell 2000, if you take a look at what's the trend line, so what represents the essence of trend? Well, the essence of trend, we have two trend lines that you could really look at and assign some significance to. One off of this high here from May 13th, and one off the April highs. Well, what's most significant right now would be the one off the May 13th high, and that's also where we have that declining 20-day moving average. So this week in the Russell, we've seen kind of the same thing. We've seen this market rallying on lighter volume. The weekly time frame, though, we see big volume, and that's what happened. Where did we get that big volume? We got that big volume on a flush below the 200-day moving average. Now we're back up above it. So this market made a lower low, took out that those emotional participants, but the volume on that sell-off was lighter than the last drive down to the 200-day moving average. So it's saying the emotion isn't as strong. So what does that mean altogether? I think it means that this volatility, like we saw up here, volatility at a turning point, this volatility may not necessarily, we can't call it a turning point yet, but it might say that the market's starting to accept these prices in here, and that we've worn the emotional people out. Now we can kind of go back to looking at some individual stock setups and focusing on some of the trends that are better set up maybe for swing trades. But we have this backdrop of risk that still looms, and makes it so that you can't be as aggressive as you were maybe 6 months ago. The volume weighted average price on the Russell 2000 since this gap lower is right here at about 64.5. What I should actually take a look at as well is what's the volume weighted average price since the high? Well, right here on the Russell 2000, it's right up at that prior this level of what's been resistance at 67. On the S&P, the volume weighted average price since the high near about 112. The NASDAQ volume weighted average price since the sell-off right up at about 46.50. So those will be potential levels of resistance as well. Now what I'm going to do is I don't want to go on and on and on about these indices, so I'm going to talk about the stocks that you guys are interested in. So let's take a look and see what what people are talking about. Anyways, Whale Trades had said earlier in the day he was kind of frustrated. For subscribers, I'd mentioned that LPS UPS was a good trade to look, a good stock to look at as potential for a short sale candidate. It's clearly in a downtrend. Now the average daily volume in here though is 800,000 shares, and it traded 831,000 shares. Today it traded 705,000 shares. So initially the volatility was low, and we were talking about this as a short below 32.80, but the thing about a market that gaps lower, you always want to wait before you decide to get involved. So let's say you had gotten involved in this one. What would have been the proper way? Maybe to get short, it gaps lower, kind of stabilizes a little bit, then breaks below the VWAP. That would have been a valid entry right there with a stop above the day's high. So even if you trade this type of stock at 32.90, 85, let's say, you stop maybe should have been a quarter of a way. So losing money sucks. No one likes to lose money, but we're starting to see this type of pattern develop a little bit as well, which is that some of these stocks that look like maybe they're about to drop another shoe are getting squeezed pretty hard. We've seen it in a number of stocks this week. CVA, Lazy Boy, or Lazard rather, FWLT, Foster Wheeler was breaking new lows and then just turned on a dime. And in a downtrend, that's what makes the short side so much more difficult, is you have to be quick. Qualcomm might be getting ready for a squeeze higher. Cisco might be getting ready for a squeeze higher. To me, those aren't good plays, but a lot of people like to look at it and say, well, it's at a level of prior support, and a lot of these other markets are turning higher. So, do you want to trade, Cisco, for instance, to the upside? Not quite yet, but that's the up to the individual and what you're looking at. So MXG Man is saying on CLH, which I'm long some calls on this. I've been trading the stock, and to me it seems like I hate to get really bullish about something. As I said on that StockTwits panel in Chicago a couple weeks ago, it seems like anytime I really like an idea because it makes sense, and then I load into it because I like the idea, that it ends up costing me a lot of money. In other words, my opinion has cost me more in the past, which is why I gravitate towards the technicals. But this just makes sense. Clean harbors with this British Petroleum thing. And then you look at the weekly time frame, it's breaking some resistance here, and it looks like it's got some room to run up towards the high 70s, low 80s. But the problem is, same thing here. Here's a stock, it trades 514,000 shares a day. Today it only traded 446,000 shares. So if, what are you comfortable with? Are you comfortable with a stock like that? I try to cut them off at about 500,000 shares, which is why I didn't mention a stock like Harry Winston Diamonds, which is only 400,000 shares ago. I was really contemplating talking about it over in here at 12.5 because it's got a great looking chart, but I was thinking, it's just the average daily volume for this HWD is only 400,000 shares. So again, what are you comfortable with is what everyone has to realize, and then make each trade your own and accept the risk and live with the profit or the loss. Let's see, for JDub 929, looking forward to it. Lots of W patterns. What are your thoughts about Hewlett Packard, HPQ? Let's take a look. Hewlett Packard's not usually a stock I look at, but this is the type of stock that I was just talking about. It's still in a downtrend. To me, this stock is broken. It's below a declining 50-day moving average. Could you get a short squeeze rally? I mean, you look at it and say, well, we've got the potential, just like the S&P where we're in this range, and the NASDAQ. I mean, just kind of look at the S&P where we've got this, here's what we've been talking about as this range in here in the SPY. Well, in HPQ, we've got kind of a similar type of pattern. We're still in a downtrend, so I wouldn't trust it. It had a good day today. The volume is clearly dropping off. So is it just a lack of sellers, that we've exhausted the sellers in here and any little buying comes in and pushes it higher? It's not one that you can trust overall, but listen, if this is the type of stock you're interested in, you say, where does it have the potential to go before it's likely to encounter resistance? Well, maybe it gets back up to that 48, backs off, makes a higher low, and then it could make a push for 49. I wouldn't, this isn't the type of stock I like. I like, my friend Mish was talking about Netflix. Netflix is in a beautiful uptrend. Someone asked me on Wednesday, how come my puts aren't working? Because it's in an uptrend. If you want to make money with puts, you can still make money in stocks like EQIX, which are in downtrends that are breaking lower. But you want to be looking at them and be aware that the potential for short squeeze. It's also kind of, just by the way, interesting the way that Coca-Cola looks right now. Looking like if it can't get back up above this prior support, there's going to be big trouble ahead for Warren Buffett. Walmart too. Walmart's broken some important support in here. So we've got some big stocks that are really just not looking very healthy. But let's take a look. Thank you, Sunrise Trader, Finance Trends, Jen Evangelist, thank you for the retweets. Sunrise also. Let's see, Joe, thanks. And Joe Fahmy's got a great show on Sunday nights as well. Make sure you tune into all the shows. I mean, take a look at all those shows on the StockTwits TV network. There's a lot of them there, and find the ones that you guys are more drawn to, I guess, from the type of stock that you're interested in. JDub929 is saying patience is definitely key. Where it got smacked down trying to trade big on both directions, stopped out each time, smaller size next week. With this volume, especially where the volume, it was so light. I think most people expected not much was going to happen. I did expect that not much was going to happen today. But then you have this final hour surge or final half hour today. So. The markets change. It's not the same every day. Just like we had seen on Tuesday, this big rally fail completely. And a lot of people were looking for Wednesday's rally to fail completely as well. And then it went higher. A lot of people were looking for the market to just drift into the close, and then it went higher. The market likes to catch a lot of people off guard, in particular on a Friday afternoon. Let's see. For Donna Chu, or actually, I'm sorry, okay, so Stock Addict, thank you. Rookie SA, let's take a look at titanium metals. I had been in the stock earlier this week. Titanium metals is in a great uptrend. It's broken that resistance. We talked about it last week, I believe, and it was in this area, saying that we wanted to see it kind of stabilize in here and then move higher. Now, it moved higher on Wednesday on a gap, and the proper way to look at that on Wednesday was that on Wednesday you'd seen that it gapped higher, ran up a little bit, kind of had these little lower highs, and then it got back above the volume weighted average price. This was the correct entry point. That's when I was talking about it for subscribers, and then we had gotten out in here. However, the daily time frame, the weekly time frame, titanium metals still looks like it's in a really nice uptrend, and here's where we are. So we're doing battle with this resistance from first half of 2000, or second quarter basically of 2008. And where does it have the potential to go if it gets through that? Well, if it can get through this prior little resistance, which is what we're testing right now, and we're getting nice volume moves in here, well then perhaps it's heading up towards the low 20s, up to 22, 23. It's a bullish looking chart. You just want to manage the risk in here, and this is the type of stock that you look at and say, what is your comfort level? Where what price are you in? If you're in down here, or if you're in right here, which high or low do you set your stop under? Do you do it on a 65-minute time frame? Do you do it on a 10-minute time frame? Or do you on a 1-minute time frame? That's up to you individually, but it's in a nice uptrend, and it looks like it should be able to continue to move higher. How about a look at Donna Chu's Apple for Donna Chu? Apple is just one of those stocks that it's obviously in a huge uptrend. That uptrend is slowing in here. It's coming down and testing that 10-week or 50-day moving average with a lot more frequency. So I would say that on the daily time frame, you'd seen that we've closed below the 50-day moving average a few times, and as I like to say, it's more the direction of the moving average than where we close for 1 or 2 days. So we still have a rising 50-day moving average, but with the 10 and 20 crossing back and forth, it's showing some indecision here. And really, Apple is kind of in this bigger range. We can take a look at what's the volume weighted average price. So I don't think it's I don't know, for an investor, I guess you'd probably want to think that, and the volume weighted average price since this gap higher right here, since this gap higher is right at this point. So we're right at the volume weighted average price, which is showing that we're in the middle of this neutral range. For the big momentum to come back into it, probably needs to clear 270 for it to really be an issue. Well, we have this higher low, a higher low, and we have a higher low here. If it breaks this area near about 240-ish, let's just call it 240, then perhaps we're going to come back down to the bottom end of this range, consolidate a little bit of more through time, and that's what this stock seems to be doing, is correcting through time rather than price. Apple is a stock that people fall in love with and then don't think it can ever decline. It's had some nasty declines in the last couple of years. So it's in an uptrend. It's innocent until proven guilty, but it just seems as though it's probably needing to consolidate a little bit more through time. How about a look at ABC for no cigar? ABC is just in this massive uptrend that is just it just won't quit. If you look at the monthly time frame, just higher highs and higher lows. Amerisor it sounds like a German company. I have no idea what they are, but it's in a beautiful uptrend on that weekly time frame, as we can see. On the daily time frame, it's been trading in this range. It tried to get out, break out a week and a half ago. It dropped back into that range. We've got these higher lows. It's innocent until proven guilty, with a stop probably underneath this level, and it looks like it wants to go again. Here's another stock with a lighter volume, which gives you reason to think that, well, maybe it won't be able to get going, but only price pays. It's come close. It's only closed above this level once ever, so on one day ever. So the buyers are still clearly in control. This looks like an important higher low to me in shares of AMB, or ABC rather. Enrique wants me to take a look at silver. Silver really needs to clear probably about 1850. To me, it's very similar to the way that the GDX is acting. That the GDX, the gold miner ETF, kind of looked like it was breaking out back in early May. It dropped back down, and now it's trying to go again. It's curious that gold can be as strong as it is, but the gold miners aren't breaking out, and silver needs to probably clear that 18.5. Otherwise, it just looks kind of neutral to me on the daily time frame. The weekly time frame, probably pretty neutral in there as well, because we have these moving averages crossing back and forth. But I still think that you look at this thing as we've got a rising 50-day moving average, so it's more likely to continue to move higher. But right now, I don't see any advantage from a momentum standpoint to being involved in silver. To me, I only want to be involved if there's some momentum. Now, we had seen a high volume attack on it, basically down to that 17 level. The market survived, and it's come back up, not on quite as vigorous volume as it sold off on, but it is back up into that range, and that which didn't kill it can serve to make it stronger. So I would keep an eye on it for next week. Maybe if it can get up near 1830, 1835, I'd keep maybe set an alert on it and look for it to get ready to break back out again. But right now, it just looks a little more neutral than anything. K.A. Zakers, thank you for the follow Friday. How about a look at AMD for Sabertooth Trader, AMD, or Tiger, Sabertooth Tiger. AMD really on a daily chart, it looks like it's in this big range, 7 to 10, but in this range, we've got a declining 10, we've got a declining 20, and we've got a declining 50-day moving average. So I would say this one is neutral to negative. If you look at the weekly time frame, it's trying to consolidate along this rising 40-week or 200-day moving average. So let's take a look at that on the daily. So it's trying to hold that 200-day moving average, but it's got a declining 10, 20, and 50. So AMD, the weekly chart, still kind of holding on, but more neutral. It just looks more neutral than anything here. Maybe on a shorter term time frame, there's something worth looking at, but even there, I just see a big mess really for AMD. I don't see anything of particular interest on that one. How about a look at AZN for fib line? Let's take a look here at AZN. So this is obviously got to be an ADR, which it is, and I say that because we've just got gaps all over the place, which tells me I want nothing to do with it personally. That's my personality, is that I just can't I can't sit with a stock that gaps like this. But with that, let's take a look at the daily time frame. I almost said with that said, and then I was thinking how hypocritical if it would be for me to say that after I made fun of all the people that go on CNBC and say, okay, look, this stock is an ADR. Now with that said, it's clearly coming up to resistance here at 46. It's expended some energy getting here, so it's just had a rally from 40 to 44, pulled back to 42. So you would think maybe the next target based on the measured move is up near 46. So if we have this as point A to point B, and then point C would measure up to point D at 46, I think you would expect to encounter some resistance at 46 based on measured move. And you've got that, it's right on that declining 200-day moving average, and you've got this prior level of resistance. So it looks like it might have another point of upside in it. It's at that declining 200-day moving average, and it's just rallied in the last 4 days from 42 to 45. So it's had an 8% move over the last 4 days. I don't think you want to chase it if you're involved in it. You've got to set your stop underneath one of these higher lows, I suppose, but the danger is that it's an ADR. It could open at 44 bucks a share. So it might have about another dollar of upside. Then I'd expect it to likely encounter some resistance because this has been a bigger area in the past and there's a lot of price memory in that area. So let's take a look at Javier wants to take a look at CRM. This is what AutoZone or Salesforce.com. By the way, this is going to be the last question because we're basically I've run over time here and looks like we're down. So anyways, I apologize. I know the recording is still going, so I'm not going to go through the routine here, but thanks for tuning in, alphatrends.net, and enjoy your weekend.